In the wake of a dramatic sell-off in United States stocks, European markets showed resilience on Tuesday after S&P 500 plunged nearly 3% on Monday. Investors' concerns over Donald Trump's tariffs sent shockwaves across global markets. Trump's remarks about transition period in the economy alongside fears of a potential recession spooked investors, especially in the tech sector. Tesla and Nvidia were both among the hardest hit, with shares tumbling sharply. While United States market reeled, European major indices opened largely unchanged. The FTSE 100 dropped slightly, while Germany's DAX and France's CAC 40 saw modest gains as traders looked for stability amidst the turbulence. Analysts warned the uncertainty surrounding Trump's trade policies and their potential to slow economic growth was keeping the investors on the edge. Despite this, Trump's economic advisors, including Kevin Hassett, attempted to calm nerves, insisting the long-term outlook remained strong. Yet the cloud of uncertainty looms large as markets brace for unprecedented fallout of the ongoing tariff wars between the United States and some other countries. Let me go across this moment and discuss this further with Mitali Nikore, global economist, who is joining us at this moment. Mitali, thank you for speaking to us. Let me ask you this. In wake of the massive sell-off in United States stock, how do you explain the relative resilience that European markets have shown? Because even in India, things are not looking that green.
First of all, thanks a lot for having me on your program. And, we've been discussing this for a while, haven't we? What is actually going on? And, let's decode what's going on. So I think when you look at the mind of an investor today, they want to park their funds in markets which offer the maximum stability as opposed to the maximum returns. Typically when we look at the investor mindset, they are looking for diversification, and typically they are looking for, a few stocks, a few markets where they can get high returns, even if it's high risk, and complementing that with stability. But today, investors are flocking to stability. And that's why you see European markets are actually doing much better. Another set of markets that's doing much better is the Japanese markets, and yen-denominated stocks are actually doing quite well. And, they're getting in a massive inflow of global equity funds. On the other hand, wherever the risk rating is higher, equities are saying, let's exit these markets. And emerging economies are like an unfortunate, I would say like a, black sheep in this case. I mean, it's like, it's scapegoat, because at the end of the day, emerging economies haven't actually done anything to cause this global economic uncertainty.
Mitali, let me understand this from you, because while the United States president and his advisors call this a transition period in the economy, there are real fears of recession hitting United States shores. Is that something that the markets are evaluating at this moment because of the uncertainty, which has now opened up because of the tariff wars which are going on?
Absolutely. I mean, think about it. If your country is importing a large proportion of its goods, and, these are coming from various economies, but of course, there is a dependence on China. Any kind of tariff is basically a tax, and that tax is going to be borne by the US consumers. So now, in a scenario where you don't know whether that tax is going to be applied or not applied, you can't actually tailor your supply chains accordingly. And as a result, it's causing a huge amount of uncertainty. If it was, said that, okay, this tariff is going to apply from this date and there's going to be no change, even then, your supply chains can be tailored accordingly, and you can find different sources for imports or for, the goods you need. But in this case, the uncertainty is what is driving the markets away from US-denominated stocks. I think it was a matter of time for us to see when would this bloodbath hit the US markets, and it's doing so now.
Can I also then understand from you what specific actions could policymakers take to stabilize investor confidence, in these turbulent times?
I think the most important action is something that we may not see, which is policy certainty, right? I mean, in this administration that we're seeing in the US, they seem to be thriving on policy uncertainty. So the one thing that, economies need to grow and economies and markets need to thrive is policy certainty. So I think at this point in time, it's very critical for US lawmakers and US policymakers to say, this is our policy on tariffs. Even if there's a policy saying there's going to be a tariff, there should at least be certainty that that's the policy that's going to be followed for the foreseeable future.